Hey everyone, welcome back. I'm so glad you're here today because we need to talk about something absolutely wild that's happening right now in the business world. And I mean, this is the kind of story that sounds like it came straight out of a movie. So picture this. Tomorrow, literally tomorrow, November 7th, Tesla shareholders are going to vote on whether to give Elon Musk, who's already the richest person on the planet, a compensation package worth up to $1 trillion. Yes, you heard that right. 1 trillion. With a T? Now, if that sounds insane to you, you're not alone. But here's where it gets even more interesting. Tesla's board has basically told shareholders, approve this package, or Musk might just walk away from the company entirely. It's like the ultimate corporate ultimatum. And on the other side, you've got Norway's massive sovereign wealth fund. We're talking $2 trillion under management, standing up and saying, absolutely not, this is too much. So today, we're going to break down what's really happening here, why this matters way beyond just Tesla, and what this vote could mean for the future of corporate America. Trust me, this story has everything. Massive wealth, power struggles, international drama, and even the Pope weighing in. Yeah, the actual Pope. Let's dive in. Okay, so first things first. Let's talk about the numbers because they're honestly hard to wrap your head around. Tesla's board is proposing to give Musk 423.7 million additional shares over the next 10 years. Now, if Tesla hits all its targets, and we'll get to what those are in a minute, those shares could be worth about $1 trillion. After you account for costs and taxes, Musk would net around $878 billion. To put that in perspective, if this package pays out fully over 10 years, Musk would be earning about $275 million per day, every single day, for 10 years. I had to do that math twice because I couldn't believe it. That's more money per day than most people will earn in their entire lives. Actually, it's more than most people's entire extended families will earn across multiple generations. Now, Tesla and Musk's supporters will tell you this isn't guaranteed money. He has to hit some pretty ambitious targets. The biggest one? Tesla's market value needs to increase by 466% from where it is today. The company would need to reach an $8.5 trillion valuation. For context, that's about 70% higher than NVIDIA's record-breaking market cap that we just saw last week. He'd also need to deliver 20 million vehicles over 10 years. That's more than double what Tesla's produced in the past dozen years. Plus, he'd need to produce 1 million humanoid robots from zero today and massively increase operating profits. So yeah, these are big goals. But here's the thing that critics are pointing out. There are lower-tier payouts built into this package. Musk could get $50 billion in shares just by increasing the company's market value by 80%, which he literally did just this past year, and hitting two other operational targets. Ross Gerber, who used to be a major Tesla investor but is now pretty critical of Musk, called these targets softball. He said, and I quote, "I just don't know in the world anybody thinks of that as fair to shareholders." Now here's where this story takes a really interesting turn. Because this isn't just about whether Musk deserves this much money. The Tesla board has essentially said, give him this package or he might leave. Back in September, Tesla disclosed in a filing that Musk had raised the possibility that he may pursue other interests if the compensation package is denied. The board chair, Robin Denholm, has been reinforcing this message, warning investors that Musk could walk away if shareholders vote no. Think about that for a second. This is the board of a $1.5 trillion company basically holding shareholders hostage. They're saying pay our CEO an unprecedented amount or risk losing him entirely and watching the stock potentially crater. It's a really bold, some would say reckless, negotiating tactic, and it puts shareholders in an impossible position. Do you approve a package you think is excessive because you're afraid of what happens if you don't? Now, Musk has his own spin on this. He says it's not really about the money. He claims he needs a bigger stake in Tesla. This would nearly double his voting power to about 30%, so he can maintain control over the company's future direction. And here's where it gets kind of weird. Musk has specifically mentioned Tesla's planned robot army, these Optimus humanoid workers the company is developing. He said he doesn't trust anyone else to control this technology. During an investor call, he actually said, "There needs to be enough voting control to give me a strong influence, but not so much that I can't be fired if I go insane." I mean, that's quite a quote, right? He's basically acknowledging that there are governance concerns while simultaneously arguing that he needs more power. It's a fascinating paradox. So now let's talk about the opposition, because this is where things get really interesting from a global perspective. Norway's sovereign wealth fund, officially called Norges Bank Investment Management or NBIM, has come out strongly against this package. And when I say this fund is massive, I mean it. We're talking about $2 trillion under management. It's the world's largest sovereign wealth fund, built from Norway's oil and gas revenues. NBM owns between 11.6 and $17 billion worth of Tesla stock, making them the sixth or seventh largest outside investor. So when they speak up, people listen. And they didn't just vote no quietly, they published a detailed explanation of why they're opposing this package. They laid out three specific concerns. First, they say the total size is just excessive. Even though they acknowledge the significant value created under Mr. Musk's visionary role, they believe the compensation is disproportionate even for exceptional performance. There's a line somewhere, they're arguing, and this crosses it. Second, shareholder dilution. Giving Musk this many shares reduces the ownership percentage and voting power of everyone else. For a fund that's managing money on behalf of Norway's citizens, protecting the value of their existing holdings is paramount. But the third concern is probably the most interesting from a governance perspective. NBIM argues that this package actually reinforces what they call key person risk instead of reducing it. Basically, they're saying Tesla should be developing leadership depth and succession planning, not making the company even more dependent on one person. And remember, Musk isn't just running Tesla, he's simultaneously leading SpaceX, X, formerly Twitter, Neuralink, and the Boring Company. So this concern about over-reliance on one person who's stretched across multiple companies, it's pretty valid. But NBIM didn't stop with just voting against the pay package. They also voted against two Tesla board directors who are on the compensation committee, the people who actually designed this package. They're sending a message: if you approve excessive pay, you might lose your board seat. And Norway's not alone. There's actually a growing coalition of opposition here. The two biggest proxy advisory firms, ISS and Glass Lewis, have both recommended that institutional investors vote against the package. Glass Lewis specifically said that the performance targets are in many cases vague, undemanding, and subject to significant discretion by the board. Musk's response to these firms? He called them corporate terrorists during an analyst call, which is definitely a choice when you're trying to win over institutional investors. You've also got major U.S. public pension funds coming out against this. CalPERS, which is California's huge public employee retirement system, is voting no. So are pension funds in New York and several other states. They're echoing NBIM's concerns about board independence. And here's something that's particularly damaging to the board's credibility. The compensation committee that designed this package includes Musk's brother. A Delaware court ruled on a previous Musk pay package that the approval process was deeply flawed because of Musk's extensive ties to directors. That legal shadow is hanging over this vote. There's even a coalition called Take Back Tesla, labor unions and corporate watchdog groups, that's urging shareholders to reject the deal. Oh, and remember how I mentioned the Pope earlier? Pope Leo XIV actually weighed in on this. The Vatican cited this compensation package as an example of global income inequality. The Pope said, if that's the only thing that has value anymore, then we're in big trouble. When the Pope is commenting on your compensation package, you know it's reached a different level of public consciousness. Now, to be fair, there's also significant support for this package, and it's important to understand why, because this isn't just blind loyalty. Tesla has one of the most passionate retail investor bases of any public company. These are individual shareholders who genuinely believe in Musk's vision and see him as essential to the company's future. When Tesla held a similar vote back in June 2024, 84% of shareholders approved. That's overwhelming support. Some institutional investors are backing it too. Schwab Asset Management, which owns about 0.5% of Tesla, said the package aligns both management and shareholder interests. Barron Capital is also voting in favor. The founder, Ron Barron, wrote that without his relentless drive and uncompromising standards, there would be no Tesla. And here's a big factor: Musk gets to vote his own shares, which represent 15.3% of the company. That's a substantial base of support right there before you count anyone else. The really interesting wildcard? The three biggest institutional investors, BlackRock, Vanguard, and State Street, haven't publicly announced how they're voting. Their decision will probably determine whether this passes with overwhelming support or just barely squeaks through. Wall Street analyst Dan Ives from Wedbush Securities, who's one of Tesla's biggest bulls, argues that shareholders will support this overwhelmingly because Musk is the key asset for Tesla. Tesla needs Musk to take it into the autonomous driving robotic future. And that's really the crux of the pro-package argument. Musk is irreplaceable, his vision is what makes Tesla valuable, and you need to pay him accordingly to keep him focused and incentivized. But here's where we need to pump the brakes a little bit and look at Musk's actual track record recently, because there's a gap between the promises and the reality. Just this year, Musk made some pretty specific commitments. He said Tesla would deliver driverless taxis in several cities. Well, the robotaxis that are operating in Austin and San Francisco still have human safety monitors inside. He promised to get regulatory approval in Europe for Tesla's self-driving software. Europeans still haven't approved it. He projected sales would increase 20 to 30%. Instead, sales have been plunging. In Germany alone, Tesla sales dropped 50% last month. 50%! In Norway, ironically, the home of the sovereign wealth fund opposing this package, Tesla sales also fell 50% in October. And here's the thing. The products that are central to justifying this compensation package, fully autonomous vehicles, robotaxis without steering wheels, humanoid robots, they're all still in development. They haven't gone on sale yet. So there's this fundamental question. Should shareholders approve a trillion-dollar compensation package based on promises that have repeatedly failed to materialize on the timeline Musk predicted? Now, to be fair to Musk, he has pulled off seemingly impossible things before. About 6 years ago, Tesla was widely thought to be near bankruptcy because they weren't making enough cars. Then Musk somehow turned it around, production ramped up, and the stock soared. There's this great quote from Nancy Tengler, who's a Tesla owner and money manager. She said Musk frequently teeters on the edge of disaster and then pulls back just in the nick of time. That pattern is real. But the question is, should that pattern, creating crises and then barely resolving them, be rewarded with $1 trillion? We also can't ignore the political context here because it's affecting Tesla's business in real ways. Musk's close relationship with President Trump has generated significant controversy, especially in European markets. There are reports that the Trump administration has been pressuring large U.S. asset managers to reduce public criticism of companies and ESG-related voting. That might explain why European investors like Norway feel more comfortable publicly opposing this package. They're not facing the same political pressure. And the sales numbers suggest there might be actual consumer backlash. When you see 50% drops in places like Norway and Germany, that's not just about competition from other EV makers. Some of that is likely political. Tesla's also facing strong headwinds from the loss of U.S. government support for EV sales. The company's financial performance in 2025 has been rocky, with sales and profits plunging in the first half of the year. So you have this situation where Musk's political activities might actually be hurting the company's core business, while he's simultaneously asking for $1 trillion payout based on future growth projections.